Hi, I'm Paula Mastrangelo, Senior Staff Negotiator with AFA, and today I'd like to discuss with you the new provisions governing insurance premiums contained in TA2. First of all, how does the company actually set the healthcare premiums? Well, Alaska hires a healthcare actuarial company to assess the experience here and calculate the funding needs for its self-insured plans. This determines the amount of the premium, including any percentage increase each year. So the company cannot just set a sky-high premium because this oversight is provided by the state insurance commissioner, who oversees and reviews the premium levels that are set by the actuarial companies. And also, AFA and the other unions sit on the Healthcare Advisory Board here at Alaska Airlines, and this advisory board reviews all the calculations which go into setting the plan premiums. Now let's look at what the new provisions of the premiums are. As you all know, your insurance premiums have been frozen. But now, beginning with 2016, they will begin to increase. So in 2015, the current rates are frozen, and there will be no change to your current insurance premiums. In 2016, the maximum cost share will go up to 18%. Currently, it's 16%. In 2017, the cost share will increase to 19%. And in 2018, the cost share will increase to 20%, where it will be frozen. And in 2019, it will be 20% also. And then in 2020, the actual dollar amount of the premium will be frozen and cannot increase until a new contract is negotiated. It is to the company's advantage to keep insurance premiums as low as possible. And why is this? Well, let's look at what happens today. Currently, flight attendants pay 16% of the total premium cost. The company's share of the total premium cost is 84%. They want to keep that cost as low as possible. Let's look at what happens to the flight attendant's share over the life of this 5-year deal. In 2015, your 16% cost share is frozen. In 2016, the maximum cost share will go up to 18%. 2017, it increases to 19%. In 2018, it can go to 20%, where it stays in 2019. And in 2020, the actual dollar amount of your premium is frozen until a new contract is negotiated. But the percentage cost share is only one part of the story. There's also a 15% annual year-over-year cap that was negotiated by your negotiating committee, which will also work to protect any premium increases. Let's look at an example. Take the 2016 healthcare costs. We don't know what those costs will increase to. However, the 2015 total monthly premium for the PPO employee only is $636. That is the portion that the company pays and the flight attendant pays combined. The flight attendant cost share is $100.02. Let's just assume that for 2016, the PPO plan costs increase 10% to $698. That is the total combined premium that the company and the flight attendant pay. That would make the flight attendant's portion, which also increases to 18% in 2016, equal to $125.74. However, and this is where the protection of the 15% cap comes in, your individual premium can never increase more than 15% from one year to the next. So a 15% increase from the 2015 premium of $102 is $115.02. So the flight attendant's 2016 premium would cap at $115. So the flight attendant's premium would be $115.02 and not the $125.74. That's a bit complicated to absorb just looking at words, so let's look at some charts. Okay, This is how the 15% cap protects your premium cost increases. So let's say in 2016 there was a 10% increase in healthcare costs, and that would mean your premium would jump to $126. Even though the contract allows for the 2016 rate to increase to 18% cost share, which would equate to $126, the 15% year-over-year cap is a more favorable application and would limit the flight attendant's premium to $115. No one knows what's going to happen to healthcare costs over the next 5 years. Let's take a look at the worst case scenario so you will know the maximum amount that your healthcare costs could increase over the life of this tentative agreement. The first example is the employee-only PPO. Currently today, you're paying $100. In 2015, that rate will remain frozen and will be $100. In 2016, that rate is allowed to go up to an 18% cost share. However, the 15% year-over-year cap comes into play, and it is capped at $115. In 2017, the most that your insurance premium can rise is 15%, because that's the 15% year-over-year increase maximum. So let's say that the 15% cap is the application that is used in 2017. That means that your premium could rise to $132. In 2018, the maximum that your premium could increase is to $152. In 2019, the maximum that your premium could be is $175. In 2020, that premium would be frozen at $175 and would not increase again until the next contract is negotiated. Now let's do the same exercise with the employee plus family PPO rate. Right now, the employee plus family PPO rate is $270. In 2015, that rate remains frozen and is $270. In 2016, the most that rate can increase is 15% because of the year-over-year cap to $310. In 2017, because of the 15% cap, the most that that rate can be is $357. In 2018, because of the 15% cap, the most that that rate can increase to is $411. In 2019, because of the 15% cap, the most that it can be is $472. And in 2020, that rate is again frozen at $472 and cannot increase until the next contract is negotiated. You're probably wondering, how do the flight attendant rates fit in with the rates for the other groups on the property at Alaska Airlines? As you can see from this slide, the flight attendant rates are at the top. We're frozen today, and we gradually increase to 20%. And in 2020, the actual dollar amount of our premium is frozen. Management in 2015 is at 25% for employee only and 30% for family. And then that stays constant right now until it could possibly change over the next 5 years. The ALPA rates immediately jump to 20%, and they remain at 20% for the life of the agreement. The COPS group, or CSAs, are at 19% and gradually increase to 22%. The RAMP group is at 21% in 2015 and increases to 22%. Now let's look at the year-over-year caps for the other groups on our property. We're at 15%. Management has no percentage cap, so theirs can increase with no stop. The pilots are in the same position. The COPS group is at 12% now and at 10% when they reach the 22% cost share level on their premium. The RAMP is at 15% now and will decrease to 10% when they reach the 22% level of cost sharing. And the mechanics have no year-over-year cap on the increase of their insurance premium. I hope you found this information helpful, and if you have any further questions or concerns, please email the negotiating committee or visit us at our blog online at afaalaska.org.